Now, while equities have been hovering near record highs, commodities have seen a divergence in performance. Copper on a monster run lately. It's up 30% this year and 11% in the past month alone. But silver and gold are negative on the year. Both of my next guests see opportunities in commodities, one in the assets themselves, the other in the miners, which have also lagged the market. Joining me now, Bryce Doty is a senior portfolio manager at CIT Investment Associates, and Michael Cuggino is president and portfolio manager at the Permanent Portfolio family of funds. So, who wants the miners, Cuggino?
With respect to industrial metals, the miners are where you'd want to be. With respect to precious metals and alternative currencies and hedge against uncertainty, inflation, et cetera, we would actually own sort of gold and silver directly, which we do.
Got it.
And the reason for that is we want those non-correlative properties in the metal, which, you know, when you get a mining stock, it's a stock. It's a business. It pays dividends. It has a management team. It has to meet investor expectations versus the alternative currency where it's just the pure price of the metal which works. And we think long term, even though it's down here, it's been a consolidation this year given the run of the year and a half before that. It's natural. It's building a base, and we think it's going to go higher long term with the creation of liquidity, stimulus, monetary velocity, et cetera, in the next several years.
Yeah, people want uncorrelated until that means flattened and up market. You know, that's what's been going on with silver and gold basically this year.
Right.
Bryce,
Good
it's
time
you.
to buy it.
Yeah, it can come in handy, absolutely, on the flip side of things. Bryce, you like the SILJ, among other things, but let's just start with why you like the junior silver miners here.
Well, we like having both the direct commodity as well as the actual miners. I mean, it just was pointed out that they do not act the same. Well, they really are based on different things. One is fundamental earnings, management team, and the profits that can go with it. But the underlying assets, the reserves, are also still going to be valued based on whatever the underlying commodity has done. And SILJ, what's nice about that group of miners and that fund is it has overlap with gold as well. So it just helps you be more diversified within the commodity space. But it's tough for us to not like virtually every aspect of commodities right now. You know, I know that won't last forever, but now's a good time. And SILJ is just going to be a nice way to diversify and even out the ride in the commodity space.